At Skube Wealth Grid, we're breaking down the hard truth behind the dramatic shift in global real estate. From boom to bust, rising interest rates have become the silent wrecking ball crippling what was once the world's most aggressive wealth-building machine. For over a decade, ultra-low interest rates fueled a real estate supercycle, driving buyers to borrow at historically low rates, 2–3%, and encouraging developers to over-leverage in the pursuit of expansion. Asset prices skyrocketed as liquidity flooded into housing, commercial properties, and luxury markets, creating a world where real estate was seen as a near-guaranteed path to wealth. But as the global economy began to recover from the pandemic, inflation surged, and central banks, led by the U.S. Federal Reserve, began to unleash the most aggressive rate hikes in over 40 years to curb inflation. Suddenly, mortgages at 7–8%, expanded capitalization rates, and a drying up of financing have turned previously cash-flowing real estate assets into liabilities. Buyers who could once afford the monthly payments on a median-priced home now find themselves priced out of the market as home affordability has plummeted to multi-decade lows in key markets, particularly in the US, UK, and Australia. Sellers are caught in a dilemma. They can't afford to lower prices without incurring heavy losses, and holding on to the property is no longer an option. Developers, especially those who finance their projects on the assumption that interest rates would remain low, are now stuck mid-project, unable to refinance their debts at higher rates, facing potential bankruptcy or forced asset sales. This is a situation playing out not only in traditional housing markets, but also in commercial real estate, where office and retail properties have seen valuation declines of 20–40%. As rising rates push cap rates higher, many commercial properties are no longer meeting return expectations, forcing defaults, margin calls, and fire sales, especially in overbuilt urban centers and suburban areas that were once booming. Even global real estate hotspots such as Dubai, Singapore, and parts of India are beginning to show signs of strain, not due to weak demand, but due to tightening liquidity, rising borrowing costs, and the squeeze on highly leveraged investors. Perhaps the most alarming aspect of the situation is the domino effect. As property values fall, so does the collateral value that banks and private lenders rely on to secure their loans. This has created a tightening credit loop that is spreading throughout the market, affecting even solvent players and making it more difficult for anyone to secure financing. Investors are now facing an environment where rental yields that once outpaced inflation are no longer attractive when compared to the safe, stable returns offered by U.S. Treasuries and other low-risk investments. The psychology of the market has also shifted dramatically. Where FOMO, fear of missing out, once drove bidding wars and overvaluation, fear has now replaced greed, and speculative markets built on emotion are unwinding at a rapid pace. As the market corrects, a more rational and disciplined approach to real estate investing is becoming necessary for those hoping to survive. While the challenges are numerous, there's a silver lining for investors with the right strategy. Crashes create clarity, and for those with liquidity, patience, and the ability to avoid emotional decision-making, this reset could present rare opportunities to acquire distressed or discounted assets at more reasonable valuations. At Skube Wealth Grid, we are actively helping investors reposition their portfolios, assess risk-adjusted returns in this new high-rate world, and navigate the changing landscape with discipline and foresight. In this new cycle of real estate, the survivors won't necessarily be the boldest investors, but the smartest, those who understand that wealth is built not only in times of boom, but also in times of bust. The key to making it through this transition is preparation, strategy, and the ability to seize opportunities when others are paralyzed by fear. If you have liquidity, it's time to look beyond the panic and position yourself for the long term. This market reset, though painful for many, could ultimately reward those who are patient and tactical enough to take advantage of the distressed properties and discounted opportunities that will inevitably emerge. Whether in residential or commercial real estate, understanding the dynamics of this shift, recognizing when assets are mispriced, and capitalizing on the right opportunities will be the differentiator between those who recover and thrive in this new world of real estate and those who get left behind. At Skube Wealth Grid, we're here to guide you through the process, provide actionable insights, and ensure that you're prepared for whatever comes next in the real estate cycle. Because in this new world, survival isn't about who makes the boldest moves. It's about who makes the smartest ones.